All right, we saw we have some more downside today, and if we look at SPY intraday, looking at the 30-minute, you saw that we had a little pop. Well, not even a pop. It actually just, kind of just went sideways for a little bit, gap down from the close of yesterday, and it never really went and filled the gap and went, it just went back down. So again, if you wanted to buy the dip, it would be above this high because of the intraday action that was happening today. You see what's going on here? So the fourth, you saw it ran up all the way up. Okay, if you want to buy the dip, you wait for it to break above these highs. You don't start catching falling ice and just keep buying all the way down, and say I'm just keep buying because I'm averaging in. That should have blow your account up quicker than you think. So again, if you wanted to break this high, which is what I just showed you intraday, versus you don't want to say, okay, it's breaking this low, I'm going to keep buying because this is tested support, and you just want to wait for it to break above the high. It has to show at least intraday strength before you can kind of go there. And again, I'm not looking for it to be bullish until it breaks above these levels. These are the levels it needs to break above, and the volume is still high to the downside. You just have to respect it. QQQ again, it needs to break above this high. It doesn't look as bad as the other chart, the SPY chart. The QQQ looks okay. Volume is a little bit lower, but it's still high volume in relative to what's going on. If you look, kind of across here and say, okay, is it relatively high? And yes, it is relatively high. So we still have to see what's going on. This is let's look at again another 30-minute. Again, you want to break here versus you want to say, shit, I'm gonna, even if you bought here, you should have been stopped out. You have to define your stops, and giving that gives you a almost a 20-cent stop. You say it stopped me out, and I look for another trade. That's it. You don't start buying because it goes lower and because you're revenge trading, and the market is always right. IWM. Again, this one, we've been saying that this has been going down for a while, and again, it needs to break above these highs. It looks like, again, if it breaks these lows, which you can see on the, if it breaks below these lows, just 15-minute, 30-minute, whatever, if it breaks below this low here, then that's what gives you the signal that it's pretty much, it's just flagging to head back lower. So again, we want to see if these lows, the low of 110.56 is going to hold. Okay, because this could just be a flag to go up. Remember, the bull volume wasn't too much. And again, don't be super aggressive. People see these candlestick formations and then they just say, oh, I see a hammer, I'm gonna go long. Well, guess what? Now you're like, oh, well, I don't know if I'm gonna go long or not, or I don't know if I should, because it took it out, and then look at what the overall trend is doing versus one single bar. Diamond, again, we've talked about this as well. Get this shit off of here. Okay. Again, the 200 is not a net. So, and I got that from my friend John Borman. You should check him out. He's a really good trend follower as well. He's on Twitter. He's really, really good guy. This is not a net. So if I took this 200 off, where would you say probably next to be going? I would say 160, and then I would look again and say, down here for 153. Okay, momentum is to the downside, and it's breaking below this flag. It continues. So if your stop is here, you just keep it there, and go for them. Remember, the risk for this trade to the short side was only like $1.50. So if it gets $1.50 in the money, you can kind of say, okay, maybe I could roll my stop a little bit and go from there. Let's look at the individual names. Apple again never gave me the higher low. Did it give the higher low? Let me check myself. Yeah, it was 62, went to 58. So it never gave the higher high, excuse me, to go for the long. So again, you would not have been in this one, and kind of it is what it is. So we just want to see what the price action is based on the index stuff. You got to be careful and see who's showing relative strength. Netflix is actually showing not much strength. I mean, again, I thought this one was going to pop higher, and I think you would be in this trade. It should, it's not ripping to the downside, but again, this is a slower volume. You want to see it break above this high, okay, to continue higher, because it did break up in the morning. I was like, oh, okay, looks kind of good, but never got above this previous high. So that's what you want to see for Netflix, because again, this is my type of trade, the dip. Okay, it's truly defined risk, but again, got to see where it goes from there, because the indexes weren't looking as shitty the other day. So again, it's going to look different now. Facebook, again, if you got this break, maybe, I don't know if you would roll your stop up, quite honestly. I wouldn't. You got to see what your risk reward is and kind of go from there. So if you're risking, $2, and let's say it's $2, just to make things easier, $2.25 or whatever. You want to make at least $2.25 on there. Meaning, I have a video, check it out, on profit management. And the reason why I say that is because if you're willing to take your full hit on your stop, for damn sure, when it goes to take as a profit, if you can't get $2.25 on profit, then you're never. This isn't a bit. You got to treat this thing like a business. So we'll see how this one works out. But again, we don't know where it's going to go. But we need to break above these highs to continue and maybe test these previous highs as well. Google not looking good. Again, this looks like if it could break below this low, it continues to the downside. Tesla actually looks good, but I would wait for more of a, again, I'm glad I still have this stuff up to show you that why I wouldn't have been premature. Some people would have wanted to go short here just based on this, lower highs, and look exactly what happened, break up. It's going to be super aggressive. You could be patient. I would be waiting for some type of retracement. I wouldn't chase here because, again, the entry would be around, here, or maybe even here on this engulfing pattern. Maybe got you in, and if you didn't roll up your stop and got frayed, you would have got, another, $8 out of it. So you would have risked, 8. Unfortunately, you risked 8, so you went 1-to-1. So, but if you had some options, maybe you'd have made some money. Priceline is giving inside day, so we got to see if it can break above these highs. Let's look at the intraday action. Yeah, it just pretty much faded from the open, so it just pretty much gap. It stayed pretty much level, and then just faded down. Again, the markets were down, so again, it's looking at who had relative strength today versus who's gonna, like Twitter. This actually looks good. So if it could break above these highs, that actually looks really good, because let me show you why. People don't like volume. I like volume because the volume is waning, so that means that it was decreasing on the way down. You have a small volume here, which is fine as long as this increases to the upside and breaks above these highs and continues there. So that could be a good candidate as well. So we'll see what it is. Again, one day doesn't make or break a market. So again, people saw Green Day yesterday and just got really excited, and I was like, why get so excited when it's just one day and the overall trend is? Remember, you got to see what the trend is. You got to see what's going into these moves versus just one bar. Okay, make sure you don't get what is this, don't get lost in the forest of the trees, some shit like that. Basically, don't look at the small thing, the trees, and forget what the forest looks like. So keep those things in mind. All right, again, we're not out the woods yet, so everything looks at cheap. That's Wall Street, mutual fund manager bullshit to tell you, oh, when things get cheaper, I want to buy it. No, I want to buy a retracement on an uptrend. I ain't trying to buy cheap shit. So again, I don't want to buy Twitter here just because it's at $30. That's not my type of trading. So and again, I'm not I know that averaging and stuff doesn't work, and it is what it is. So again, be careful with your longs right now. Be careful, and if you don't feel good, remember, cash is in a position. Take care.